Hi, my name's James Chatter and I'm the Corporate Account Manager from Leeds Building Society. Thanks very much for taking the time to watch this webinar today. Today, I'm going to be focusing around our investment segment. This is very much a key segment of ours in terms of our lending strategy. And I'm going to be focusing around talking to you around buy-to-let, HMO, holiday let and second homes. We've got a number of different other parts of our proposition, such as affordable housing, where we include shared ownership, which is something we're probably best known for. We also focus on interest-only mortgages and mainstream with things like green mortgages and Flexit. But as I say, today I'm going to be focusing very much more on the investment side of things. So I'm going to start off talking to you today about buy-to-let. Buy-to-let makes up around 40% of our overall business that we do with the intermediary market. So it's a very important aspect of our business. And we've got some excellent selling points for you to be able to use to help some of your customers' circumstances. The first one is for me is that we have no maximum age at the end of the term of the mortgage for our customers. So for those customers who are looking to go into the buy-to-let market later on in their years, perhaps they've had a windfall or trying to use some of their retirement funds, or if you've got a customer, let's say, who is perhaps 70 years old and has got an existing buy-to-let portfolio, and they want to let that portfolio carry on and continue to use that investment, then that's something that we can support with. Because as I say, we don't have a maximum age at the end of the term, and we don't have a maximum age for application. So in that scenario, that 70-year-old customer can apply for a term of up to 40 years on the mortgage. We also don't have a minimum income requirement. So unlike a lot of the rest of the high street, where you might need to have a sort of £20,000–30,000 a year main income to support the mortgage, for us, we don't have a minimum income requirement, or the customer does have to have, but the customer does have to have a main income away from the buy-to-let property, unless they're a professional landlord where they've got 4 or more properties in their portfolio. Into the, I suppose, the more nitty-gritty part of the criteria. So we can go up to a 75% maximum loan to value on remortgage and purchase, and we can now go up to 80% loan to value on a purchase where the EPC is C or above. And the idea of that is that we're giving an extra 5% loan to value to support those landlords who are looking to go into the buy-to-let market with the expected changes that could be coming in 2025 and 2028, where the EPC requirements could be changing. And so that's why we're trying to help give that extra little bit of loan to value on those green buy-to-let products. The maximum of buy-to-let properties that a customer can have with Leeds Building Society is 4, and the maximum portfolio size is 10. Now, we don't include in that 10 any properties that are owned outright, any residential properties, or any properties that are wrapped within a limited company wrapper. We've got a number of different ICR and stress rates. So we've got a tiered ICR of 125 for basic rate taxpayers, 145% for higher rate taxpayers, and then 150 for additional rate taxpayers. That's then stressed at 5.5% for purchases or for capital raising remortgages, and then up to 5% as a stress rate for like remortgages to help those buy-to-let landlords with the affordability stretches. I'll move on now to tell you a bit around our holiday let proposition. So holiday lets is something that we had to take away for a little while during COVID, and we were unable to bring that back. Also because of the, I suppose, the sheer demand that we've seen since a lot more people have been staying and keeping their holidays in the UK. So we've seen this be a very particularly popular product over the last sort of 6 to 12 months. We've got a maximum loan to value of up to 75%. That was raised from 70% from when we were doing holiday lets before the pandemic. Again, you can have a maximum of up to 4 either buy-to-let or holiday let properties with us. So yeah, it's the same whether it be HMO, holiday let, or buy-to-let. The maximum a customer can have with us is up to 4 in total, and the size of the portfolio is up to 10, as I just mentioned on the buy-to-let slide. We've got a number of different ways that we can assess affordability on our holiday lets. So the first one is that we can use a independent holiday let valuer. We've got it has to be from our reputable list. So on our website, if you go onto the holiday let page, you can find our list of reputable valuers, and we can use the average of a high, medium and low valuation, and we'll take that over a 24-week period. We can also value the property based on an AST. So we'd send out a standard valuer to go out and do a sort of a normal buy-to-let valuation based on an AST. That can sometimes work really well if you've got like a city centre flat that's newly been changed into a Airbnb. That can sometimes really help it to prove the income in that kind of scenario. If the customer is particularly well off and is in a position where they want to just buy it using the affordability that they might have on a second residential basis, then that's something that we can do for them. You'd need to contact your BDM to speak to them about the different affordability calculator, because we'll be taking into account the commitments that they've got on the other property, and we will ask for 3 months bank statements for bills showing the commitments on that property, and we will ask for 3 months worth of income to prove your income over that time, and if it's self-employed, we'll ask for 3 years to be able to prove the income over that time to support that kind of a mortgage. But in that scenario, we'd be able to, once we've passed the affordability assessment, we'd be able to offer a holiday let product so that the customer can then let that property out. We can also accept Airbnbs, as I mentioned earlier. If you've got like a city centre flat that someone's looking to change into an Airbnb, then that's something we can now look to accept. We've also changed our minimum income requirement. This minimum income requirement is the only one that we have across our investment segment. For holiday let and HMOs, we don't have any minimum income requirement, whereas we do for holiday lets, which is 40,000 for sole income, and joint for for joint income it's 60,000. So good news that we've got the joint income in now, because previously, if you had 2 people want to apply who had £30,000 worth of income, if they didn't meet that 40,000, then we wouldn't be able to help them. But we've now improved that now, so we've got the joint income of 60,000. So those applicants where they're earning 60,000 between them, but don't meet that 40,000 individually, we can now look to help them with their holiday let inquiry. Now I'll talk to you now a little bit around HMOs. Again, HMO is something that we had to take away for a while during the pandemic due to some challenges around the valuations process, but we've been able to get that sorted now. And now that we're kind of through the pandemic, we're in a much better place for HMO, and we brought HMO back to our proposition at the back end of last year with some improvements, which is always nice. So we can now go up to a maximum of 750,000 at 75% loan to value, and now a maximum loan amount of 1 million at 70% loan to value. Now we define our HMOs into 2 different categories of either a small HMO or a large HMO. Now, a small HMO is a house up to and including up to 6 occupants, and a large HMO is a house that's more than 6 occupants. And we will use the license on the HMO to define whether it's classed as a small or a large HMO. If so, in terms of the license, it will tell us how many people the property can actually hold in terms of what can live there. If there isn't a license on the property, then we can still support, but we'd rely on our valuer's opinion of the property as to how many people can live there. It's really important that when you are trying to process a HMO with us, that you speak to your BDM around how many people are living in the property and how many people can potentially live in the property, so that you can get the definition right and choose which product is right for you and for your customer, because it decides the rate that you'll be getting and also the type of valuation. Because with a small HMO, it's more like a kind of a buy-to-let valuation, whereas a large HMO is a more sort of yield and investment-based valuation, much more in depth. So you really want to make sure you're getting the best for your customer and making sure that it's the right type for them, because we don't want to have to go back and have to change the product. We can go up to a maximum of 8 bedrooms, and single and joint ASTs are acceptable. So if your customer's got a student property and perhaps they've got locks on all their own doors and they're all on separate AST agreements, then that's absolutely fine, as long as it's within the terms of the HMO license. With the valuations as well, we will also value the property based on 100% occupancy. So looking at a 6-bedroom property, if there's only 4 people living in it, then our valuers are instructed to very much go in and value it at 100% of the property's occupancy, as we very much understand that there's a high turnover in HMOs, and you could end up having those two rooms filled the week later. So we'll go for 100% occupancy with regards to the valuations on HMOs. Now, finally, I'll just take you through our second homes proposition. So second homes, we can go up to a maximum of 85% loan to value on capital and interest, and then 75% on interest only in part and part, and then up to a maximum of 70% loan to value on interest only. A really good selling point of our second homes proposition is that you don't need to have a repayment strategy when it comes to the interest only 70% loan to value. So we won't be asking you for any kind of proof of investments or any other kind of strategy for repaying that interest only loan, other than it being just the sale of the property that the mortgage is going to be on that second property. The properties can be used for, the products for second homes can be used for a number of different uses, whether it be a pied à terre, where someone maybe lives in the countryside but goes to work in the city during the week and needs to have that property for work purposes, or potentially even for a holiday home for themselves, or even for a family member to live there. Whether that be a student who's moved to another city and they want to buy them a flat to live in, or potentially if you've got an elderly relative that might be moving home to be closer to them, helping them buy that property for them to then live in that property. We do have a nice part of our criteria as well. In those sorts of scenarios, we can accept private rental agreements between the family members, because we're assessing the property based on their on a residential affordability assessment, then therefore we're happy for private rental agreements between family members as long as it's not on a formal AST. So if they are going to be paying them a little bit of cash towards the sort of a rental to help pay with the bills, then that's acceptable to us as long as it's not on a formal AST. Okay, I hope that's been useful to you. Thanks very much for taking the time to listen to this quick webinar. If you do need further support, then you've got the different options there of how you can contact your BDM. So we've got two options for you now. Most of you will now have either a field BDM and a phone BDM, as we've got a phone BDM team which is available for business inquiries for everybody on 0345 045 4050. You also have your phone BDM, sorry, your field BDM. If you go onto our website and click on contact us and put in your postcode, and your field BDM's details will be brought up. You've also got our online broker chat service, which is available on our website. And for cases which are ongoing and you need support with, then you can call our mortgage desk for updates on 0345 848 0061. If you also need a case update, then you can log on to our mortgage hub, and on your portal there you can get up-to-date case updates straight away there from Mortgage Hub. You can also follow us on Twitter and on LinkedIn. If you just follow the tags there, LBS Intermediary and LBS Intermediary on LinkedIn. Thanks very much for your time. Hope that's been enjoyable. Hopefully I'll see you again soon.